for today's Nifty expiry, daily and weekly chart formation for the market, how the various derivative indicators are placed at the beginning of the day, and how they are changed until now. What are they suggesting? And finally, we'll know the outlook of the Nifty. We'll have a derivative trading strategy one should take today, and what do we expect Nifty to close in today's expiry. So, friend, let's begin. Let's discuss about the Nifty technical chart and patterns. And friends, if you look at the chart, I won't be able to present you the chart due to technical glitches. You all know that we have seen some tremendous up move, significant up move from the lower levels. After the range bound action, Nifty has witnessed the sharp upside breakout. In between, we have seen some consolidation moment or a range bound action. After that, eventually those range bound actions have taken into upside and Nifty closed higher. We are just reaching near to the all-time highs somewhere around 26,300 levels and currently showing consolidation. Over the last few weeks, we have seen Nifty showing weakness from the highs of around 26,100 levels and currently trading around 25,800, 850 levels. So what does it means that primary trend of Nifty remains positive? We have seen some significant up moves. The uptrend remains intact for the near term, and the high tops and bottoms is visible on the daily chart as well as weekly. And the smaller consolidation and intraday consolidation and range bound actions have eventually taken out. Presently, Nifty showing consolidation for the day, intraday showing some weakness from the higher levels. We have seen some Nifty sliding down from the highs of 26,000 levels and currently trading around 150 points down from the highs, now trading around 120 points lower. And if you look at weekly chart, after showing some stellar move, found some resistance around 2600, 26,000, 26,000 to 100 levels, showing some consolidation pattern. So that indicates that near-term trend remains intact. The market is showing some consolidation, weaknesses emerging in today's intraday session. Let's understand how things plan out. Technically, there is a strong support around, as per intraday chart, there is a strong support around 25,800 odd levels. That is the opening upside gap of last session. And we have seen during this uptrended move, the smaller supports have been respected very well, and Nifty bounced back from the solid support as the main indicators are looking positive and the near term remains up for the market. So the immediate support is going to be the crucial for the market. I'm expecting, and from our team, we are expecting Nifty is likely to find the support, the immediate support of around 25,800 levels. We could see Nifty bouncing back from the lower levels in today's session. That is what the chart is indicating. So, friends, now I would like to invite Ajit Naik on this discussion about the derivative aspects on the market. So, Ajit, good afternoon. We have done the discussion on the technicals. Now, let's understand how things have been panning out on the derivative sides one by one. So, I'll give you the four or five options. I'll give you the questions. Please discuss on that answers. First one is how derivative data is placed at the beginning of the day. Second, the derivative indicators have changed till now. What are they suggesting? What are important support and resistance levels to watch out from the derivative distribution chart? And finally, we'll discuss about the implied volatility, how that is going to affect in today's session. First, we'll start from the derivative data, how the derivative data is placed at the beginning of the day. Ajit, over to you.
Okay, thank you, Nagraj. So first, please confirm, is my screen visible now?
It's not visible. I think you have to.
Ravi, can you share my screen? I have already shared. Hello. So let us start and understand what has happened yesterday.
Video open.
Yeah, video on. So we had seen long build-up yesterday, and we have seen that market rallied strongly and it went up by 171 points. So that was a good bullish sentiment which was there yesterday. So long buildup was also seen in Nifty and Bank Nifty. So and also put call ratio rose to 1.07 from 0.76 level. That suggests that the strong put writing had taken place. But in many of the expiries, what we have witnessed is a day before expiry, whenever the market is quite strongly bullish or bearish, on the day of expiry, it tends to reverse during the first half of the session, and later half of the session, it goes in that direction. So similar kind of pattern is also visible today. Also, if we were to look at the FIS data, they are 3-month high. They are covering their short position. Hello.
Yes, you are audible.
Yeah, my screen is also visible, right? Yeah. So that is the very good situation where FIs are not covering their short position, and then a market is going up, and every level we can see that there is a put writing in the market. So that is a well placed bullish momentum is prevailing in the market. Now, we have already discussed that a day before expiry, if there is a bullish session, and today there is high probability that market would correct, and that is what we are seeing today. And now, if we combine the open interest data, let us look at the open interest chain. So this chain gives us immense information how the major players of the market has placed their position for the day, and we have to compare this with the yesterday's data. So yesterday's data, we have seen that at 26,200 level and 25,800 level, that is call writing and put writing. And even if we look at the today's data at 25,800 level, we can see the green line. This suggests that the put writers are very active here. After this, there is a small green line over here. Means this is the second highest put writing. This is our own inbuilt software which we are looking, and it is giving a good insightful information about how market is placed. So looking at this indicator, we can see that at 25,800 level, there is 210 lakh shares which is outstanding and written by the big players. And at the lower level, on the higher level, at 26,000 level, uh, there is 355.45 lakh shares which is when added. The open interest is added by the major players. So this suggests that the market is going to remain in the range of 26,000 to 25,800 level. So when we have this information, how we can play? So that is the next important step. So looking at the market direction and overall direction, and looking at the market data, we can say that whenever the market is coming near to the important support zone of 25,800 level, the current market price is around 25,830 level. So like now we are about 30 to 40 points away from that level. Whenever it comes near that level and start to show us a sign that market is bouncing from that level, we can create a good long position at the near that level, and target will be definitely 25,900 and 26,000 level, which is also derived from the open interest data. Means call writers are writing at that level. So these levels can be used in that way. And now the next question was about the implied volatility. So before that, I want to show you how the VIX data, India VIX is placed. So if we look at the India VIX, it is rising. So that suggests that if we buy calls, it is going to be fruitful, because the main reason for the option price to raise is VIX. So when there is a VIX, the VIX goes up, the premium also goes up, irrespective of the market direction. So now in today's session, VIX is going up. That suggests that if we buy call or put, it will be favorable. Now, when we know that buying call and put is going to be favorable, we'll use the data of our open interest and we'll capture where to buy the call and why to buy the put. So now we are near to the support zone. So it will be fruitful for us. The probability will be in the favor of a bull call spread, because we are protecting our we are not going to give entire premium to the market. We are planning for the bull call spread. So at this level, bull call spread will be very fruitful. And now if we look at the implied volatility, the implied volatility is 10.8 and 11.6 near call side, and at 8.60 and 8.69 near put side. So this is slightly higher than the normal implied volatility what we usually see. So that also suggests that market call implied volatility is higher than the put implied volatility. So there is chances that the market can bounce from the 25,800 level. Yes, Nagaraj, over to you.
Yes, thank you, Ajit. Ajit, can you please unmute yourself? Yeah, good insight from the derivative front. Friends, what we have learned from the derivative side, from Ajit, is the derivative data, where it is placed, how the derivative indicators have changed till now from yesterday. And we have also learned about, seen about the important support and resistance to watch out as from the option distribution chart for today's session, and the implied volatility, how the volatility is going to affect the market, how it has affected the market so far today, how it is going to affect the henceforth till the close. So Ajit, considering the rationale we have discussed, which strategy we should suggest for traders for this today's expiry of Nifty?
So as we discussed, that market is near to the support zone, and overall trend of the market was bullish. And we can go for bull call spread. We can buy 25,800 call and sell 25,900 call. So in that way, we can hedge ourselves, not giving entire premium to the market, and favor all the data is favor of bulls. So here is a time where we can initiate that strategy.
Yes, Ajit rightly said. So friends, the thing is very clear. Market, the intraday trend is showing some signs of consolidation. We have seen some declines from the higher levels. The overall near-term trend remains intact. We have seen some excellent up move from the lower levels. In the last 2-3 weeks, what we have seen is lesser declines and a sharp upside momentum on the upside. So what the whole technical and derivative indicators are suggesting, there is a higher possibility of Nifty coming down towards the support of around 25,800 odd level, which is a strong support. The intraday time frame as well as daily time frame, which is happens to be a opening upside gap of last session as well. So intraday trend is weak, and the overall chart pattern is indicating that there is a possibility of Nifty bouncing back from the lower levels. So we suggest a strategy. One can look to create a bull spread in Nifty today's expiry on the dips around 25,800 levels, like buying 25,800 call and selling 25,850 call for at least around 80 to 100 points of volatility, especially on the upper side when you are buying in a long side strategy towards the end. So there is a volatility, and volatility is going to be there till the end of the session. So if anyone wants to, apart from this strategy, one can look to buy even 25,800 call as well on the direct on the dips around 25,800 levels in the index. So friends, this is the strategy for today's expiry. That's all from our side. Thank you, Ajit. Thank you, everyone, for joining this webinar. Wishing you a happy trading day, and we will conclude this webinar. Thanks.